In today's video, we are going to be discussing the 5 critical aspects of getting your pre-approval in order for you to move forward in the very beginning steps of buying a home. So we're getting after it right now. If this is your first time to the channel and you want to know everything there is to know, make sure you click the subscribe button, tap the notification bell, pet your dog. You will be the first to know about everything happening in the Portland market. I'm Ann Stewart. This is Erica Hagfirst. And as we've said before, we are your go-to gals if you are making a move to the Portland metro area. We've got all of our contact information listed below, so don't hesitate to reach out. We would love to hear from you, and we love getting on phone calls with clients who are even months away from making a decision to make the move. All right, so we have decided to do this video because as basic as it sounds, we do this every day. You don't do this every day. We want to make it edible for you to understand what are the 5 critical steps to know about financing and why are we doing a whole video on it? And why is it so important? So, number 1 on this list is really understanding your affordability. There's nothing worse than when we meet with buyers and they've been looking at like price level right here. And really once they, meet with their lender, they realize they should be looking down here. Unfortunately, I think we've all done that. And when you go to look at something less than what you want, it feels not so great. Or you get in the trap of being online and using some calculators that may not be considering the local property taxes or the HOA. Maybe you're not going to be putting 20% down. A lot of times these automated calculators put in, they just plug and play with the numbers, and they're not always going to be what you're going to do. So understanding what you can afford based off of, what you make. Are you a W-2 worker? Are you self-employed? All of those type of things are going to affect your affordability, even your credit score, and then the debt that you carry outside of your potential mortgage. So truly understanding that and talking with a lender is going to be so important. And then, on top of that, there's going to be fees associated with the purchase of the property. So understanding affordability, what you can afford, what monies you might need to be bringing is just step number 1, because you don't want to get halfway into the process or 2/3 of the way, maybe you're under contract on your property and you're like, oh my gosh, like big, wide, eye-opening, experience when you start seeing those numbers of what you're looking at. Yeah. And honestly, sales prices, a lot of times we have to discover what that looks like and then kind of help you understand what expectations you can get for the price. Oftentimes, if you don't know the area, you don't know what you can get for your money. So when we send you to a lender or you talk to a lender about your affordability, the next step is then to say, okay, based on that, what are the options available? Because sometimes your price range is going to dictate where we need to even look. And it may not always be the places you had hoped for, depending on what that looks like, but that is such a critical point for this journey. The other thing to think about is that we have an idea, like everybody tosses out interest rates right now, especially because they're kind of high. And something to think about is that we generally toss out like the number that's associated with having the best, great credit, low debt to income. Good point. All of that kind of stuff. And that just may not be the situation for everyone. So understanding if ballpark or, normal interest rates are 6.5, well, are you a 6.5 or are you going to be a 7 or a 7.5? Because that's going to it makes a huge difference in what your monthly payment, could be and just your overall affordability. So making sure that you understand all of those aspects of your affordability before you dive into the process of starting to go look at properties and get excited and, spend your resources doing the search, it's definitely prudent to know. Okay, number 2 is the type of financing. Now, a lot of people think, oh my gosh, I have to have 20% down. That's not the case. There's a lot of different types of loans available out there. For some people, they may have 20% down, but it actually might work out better for them to do 10% down and keep some money behind so they can do some improvements on a property, or they realize they don't need to have the full 20%. Other people are barely scratching out their down payments, and we have 3 to 3.5% down payment options. If you're a veteran, you might be able to tap into the VA loan sources. Jumbo, if you're taking a loan over, say, 670 in our area, then you would qualify for a jumbo financing. And that would maybe decide whether you work with a local lender or you work with a big bank, because that's another piece to this, is who's got the best options for you. Yeah. In most cases, we're going to recommend you talk to a local lender or a credit union because they offer a lot of really good options, unless your financing tends to be where you would benefit from going with like a big bank. And some of the things to think about, so there's conventional financing, which is going to be great for, if you can generally go conventional, it usually, I don't want to say has the loosest guidelines, but it's kind of like got the loosest guidelines. FHA is another option. It's great for first-time home buyers a lot of times. It's got less requirements, but it does have more requirements of the house. It's great if you have maybe credit challenges or you don't have a lot of money to put down. So they're also going to make sure, when it comes to appraisal, that the house is in good shape and that you're not, able to just buy a fixer on a lot of FHA loan programs. As Ann mentioned, veterans have a VA loan option, and that comes with a 0% down purchase option. You can also put money down with that, so it's not like it has to be that way, but obviously always a nice option to be able to keep that money in your pocket. A lot of banks have some private options as well. You can do hard money loans, which come with their own, slew of things to go with them. They're usually high interest, and for maybe those flip type properties. If you're self-employed, you may want to look at a portfolio lender. Mm-hmm. Those have unconventional standards for being able to approve people and offer better loans than if you went conventional. Also great for like bare land or those type of things. So there's a whole slew of loan programs out there, and each program has multiple levels of, what you need. As you'll find with bare land, you generally need to have a lot more money to put down. Like minimally, it's usually about 10%, and your loan term is going to be different than, residential mortgage that's going to be owner occupied. So understanding all of those caveats, is really important because, if you're buying a second home, you're generally going to have to put 25% down. The less you're attached to that house in terms of like not being owner occupied or it not having a house on it, the more they're going to want to secure that loan. All right, number 3 is your payment. So you've gotten approved for a loan. Yay, kind of affordability. But now let's get a little more granular with your payment. Things that are included in your payment that sometimes you may not be considering are property taxes. What are the average property taxes for the house that you're looking at? Sometimes the lender will put a little bit of a buffer amount on what they think it could be. Depending on the county you're looking in or the types of houses, it could be more, it could be less. HOAs, and homeowners insurance. So you're looking at your principal interest. We call it PITI, principal, interest, taxes, and insurance. What's that whole payment look like? Because what we don't want you to do is have payment shock or realize, ooh, I forgot. I'm looking somewhere where I have to include about $300 a month extra for HOAs. Or maybe you're looking, I was gonna say, at an area that has super high property taxes, or maybe this house in particular. So we always, you have to break it down for every house that you're looking at because property taxes can really affect your overall monthly output. If you have a house that's got, maybe absorbently high or absorbently low property taxes, it can either affect you negatively or positively. Yep. Just like your insurance, it's going to be really important to have an idea of what that home insurance looks like. Is it going to be $1,000 a year? Is it going to be $1,500, $2,000? Because that's, again, going to affect. And some of that has to do with location of home or type of property, but truly understanding, condos kind of get off a little bit easy sometimes because you're doing insurance that's from the studs in, so less to insure. However, you will pay for another insurance in your HOA. Understanding as well that HOA, if you are looking at properties that need, have an HOA, that is going to affect your level or your overall level that you can afford just based off of how they calculate that all out. And sometimes with HOAs, because if you are looking for a condo or a townhome, or even a neighborhood, if those HOAs are over $100, that can throw out your, payment to the point where you're actually looking for a house, maybe even $50,000 to $100,000 higher. So a lot of times we have to back up if you're looking to properties with HOAs is to find out, okay, you might be qualified up to $500,000, but with a $200 a month HOA, we might be having to look at $450,000 and below. So just know that that's part of this process. That's why it's so important to get your financing dialed in ahead of schedule. And you really just want to make sure that you're not just looking at that principal number. You want to make sure that you're looking at the entire number that includes all of those. Again, like Ann said, it's PITI, make sure all of those numbers and that they're pretty accurate because if you go based off an estimate that you're given probably at the beginning, a good faith estimate, which a lot of lenders give out, and then you look at the, property A, and property A is skewed on, maybe property taxes, and it's going to require higher insurance. Just make sure you understand that. Really understanding your numbers before you go into something is so important to prevent stress down the way. Mm-hmm. And really, our job is to make sure that you guys understand and it's going to be stressful, but we like to try to minimize it as much as possible. So, don't be afraid to ask your lender to run numbers on a property that you're looking at. Understand what that's going to look like before you make that offer so that there are no surprises, because nothing's worse than having your heart set on something or being like, we got our offer accepted, and then all of a sudden realizing what that's actually going to look like month to month. Here's an interesting concept is that there's a lot of different type of lenders. So this is number 4. Buyers come to us all the time. They're like, oh, okay, well, I went to my bank and, I got pre-approved. Okay, that's great. Great place to start. However, things to think about when you're deciding who you want to work with is, what type of service level do you want? So to back up a little bit, you have private mortgage brokers, you have big banks, you have credit unions. Those would be probably the 3 biggest that we're gonna work
general we use.
Now, each has its own pros and cons. Your bank, there's simplicity sometimes in being like, oh, well, I bank here, I want to do my mortgage here. That's great.
Not always the place to go.
To be honest, Anne's 100% correct, because it's going to be a challenging process to get the loan done. We generally find that the big banks operate on their own timelines.
By the way, there's no business relationship. Just because you bank with them doesn't mean they're going to treat you 5-star customer service. And just because you bank with them doesn't mean they don't need all your documentation and paperwork. They don't go into your files. It's irrelevant that you bank with them, to be honest, because we used to, back in the days, decades and decades ago, have a little bit more of that customer service, oh, hey, we know you, come on in and get your loan. Nowadays, you're going to be actually in a very compartmentalized process with your bank where they're going to have different people looking at your file, and you'll never be able to talk to them. And even the representative at that big bank will just be at their mercy. So even though you might be talking to somebody that's really nice and friendly at the branch office you go to, does not mean that they're going to be able to expedite your process or get it done any better or sooner because of that. In fact, we find oftentimes they're delayed and they have no control, and it's very, very frustrating. And not to mention, they are not giving you a better deal just because you bank with them.
No, and in subsequent things, as a side story, I have looked at where the bank I'm banking with, what their loan rates would be versus other entities, and they're actually almost always worse. So, it seems great, but almost every option for mortgages is going to allow you online banking.
And we're talking about the Bank of Americas, the Wells Fargos, the Chase, the big banks that a lot of people bank with. Those are not usually the greatest place to get your...
And to be honest, a lot of times listing agents are going to look at your pre-approval with them and they're going to be like, I'm not sure that this is going to get done on time. I'm not sure that I want to work with this, because what happens is that all of these different departments that they have to go through underwriting and appraisal are all in different parts of the country. So, you're dealing with this local office. However, the whole process gets into Arizona and the Midwest or the East Coast, because that's where those departments sit.
Now, so can we break down for them a local lender? What do we mean by that?
Local lender. Yep. They are fantastic in the sense that they are generally, local. You could go sit at their office sometimes, talk with them on the phone.
They have access to all those banks, by the way, the Wells Fargo, the Chases. So
the mortgage brokers are really super cool. They can shop all the different loan programs that most of these big banks offer, and then they can offer you competitive rates. It's kind of like having a broker for anything. They can shop everything, find the best option for you based off of your circumstances. They don't have an hourly pay. They're getting paid when you are happy and you've closed your loan. And so guess what? They're a lot more motivated to work for you. You are not just a number in a queue. You are a person. You're going to talk to that person and their small team.
They can push things along.
When you are working with a mortgage broker, you generally can do a 2-week close if you want to be competitive, and that's something that's right in your offer. We've seen things turned around in 12 days. I mean, a week. It's insane what good.
But they have that nimbleness to be able to do it. And kind of to give you an idea, if you go directly to, say, Wells Fargo, you only get Wells Fargo product. If you go to a banker, like what we're talking about, they have access to maybe 50 to 100 different lenders out there, and they can take your credit score, your debt to income ratio, all these things, plug you into their system, and have maybe 15 banks who would love to give you a loan at really competitive interest rates. And those lenders, by the way, can be competitive in their fees as well. So if you're shopping or you're looking at Wells Fargo, don't hesitate to take those fees and send it to a local lender to be able to say, can you match or beat this? And 9 times out of 10, they can. And if they can't, they'll be honest with you. A good one will say, you know what, I can't beat that rate. That's a good deal. And if you need a recommendation, by the way, for a great local lender, of course we know. We always work with the best.
So. And then there's kind of a third option, and that's your local credit union. And I generally find they're kind of the bridge between the two.
Yep.
So they're, I'm going to say, better than your big bank. They are more local. They're going to be a little bit quicker. You are going to deal with that local person at your branch a little bit more. However, they still can be delayed. I still find a 30-day close can be a little bit challenging for them at times, especially if there's a holiday in there. It's going to be less personal. It still does not necessarily matter if you bank with them, other than sometimes you have to have an account just to get the opportunity to do business with them. But it's not going to be the personal. They're not going to be quite as good as the rates that a mortgage broker can generally provide you.
And
So,
occasionally credit unions can have their own programs that are really beneficial to consider. So sometimes they just offer like a first-time homebuyer program, 0% down, or some doctors type program or whatnot. So we often feel like in the hierarchy of banks, it's local lender, credit unions, and then your bigger banks. And also credit unions are really good for like if you need to do a HELOC or equity line of credit.
they're fantastic.
You wouldn't want to go anywhere else for those. They tend to beat out rates and cost and all that.
So I'm going to throw in a bonus number 4 that you should be aware of.
A bonus.
So online lenders. We oftentimes have buyers come in and they're like, oh yeah, I got
Rocket
great
Mortgage.
Yeah, with an online, they're based out of, East Coast BFE, and, I've never heard of them. And what's scary about them is that when you have no personal relationship, I can't tell you the number of times that we've had, the Friday before closing or the day before closing, and they call and they're like, oh yeah, we missed something, or, I don't know, but we can't do the loan anymore.
Yeah.
And we've had that happen and time again, and you just don't want to go with the online lender. I know they seem attractive. It seems easy. You can do it from, your sofa, but having that relationship, even if you have to get on a 15-minute call with somebody, most of the mortgage apps are online anyways. So desperately, try to stay away from any online entity that doesn't, just say no.
A lot of times they solicit you with some really compelling offer. It doesn't always mean that offer stands for you as you go through the process. So definitely have a grain of salt with those, and always cross-check it with a local lender, and always have a backup option.
Yeah.
Especially if you're thinking, wow, this online lender is offering something so compelling. Well, again, it may mean the difference between you getting your offer accepted or not, because listing agents do not like. It's a red flag to get an online mortgage broker or some bank we've never heard of from some other state. And oftentimes, especially if you run into a competitive offer situation or you really want that house, but that listing agent saying, or they can't get a hold of your lender, because a lot of times these online lenders will spit you out a pre-approval letter and put a name on it and a phone number, and then that listing agent will call and verify your pre-approval letter. And if they can't get a hold of him on the first round, that can mean the difference between you getting that house or not. So just word to the wise, listen to what Erica just said about that.
So think about this. Try to stay away from big banks and online lenders. Listing agents don't like those.
All right, number 5 is understanding all the monies part. Now, we talked about getting the amount you're going to qualify for to buy a house. We're talking about looking at your payments, but there's more. So there are 3 things that we would tell you to make sure you understand. Number 1 is your down payment. So down payment is the amount you're putting down from the price you agree on with the seller to your loan amount. And that can be anywhere from 0% down, actually, 3%, 5%, 10%, 20%, whatever. That's your down payment. Then there is your closing costs. And your closing costs are going to be paying for your title and your escrow fees, your loan origination fees, your property tax and homeowners insurance preparations. So everything to do with getting the loan, the title, in the closing fees.
And setting up your escrow accounts.
Correct. Now, there's one other fee we're going to talk about, because starting very, very soon, at the time we're doing this video, we're also going through an industry change where there could be the possibility that you're going to be paying for the buyer broker that you are going to be working with. Starting August 17th around the country, there will be a new requirement to sign a buyer service agreement. We've done a video on it with the agent you choose to represent you on a buy side. Now, as we mentioned in that video, there's going to be a negotiations that happens usually with a seller on helping you maybe offset the cost of that. But in the event that they don't cover all of it, you would have another line item on your closing cost statement that shows the amount you would owe your broker. So those are the fees that you should be aware of.
Some other fees to think about, though, that are going to be outside of necessarily your closing costs per se, or not necessarily included in that fee that you pay at closing, are going to be your home inspections. And depending on what type of property you are looking at, those can, vary a bit. But for your average residential home in a suburban setting, you're going to be looking at probably about $700 to $1,000. Now, that's like a whole home inspection. That's a sewer scope, very important, radon, and possibly a tank locate. If you're looking at an acreage property, just know that your septic or well could also, are going to require more expensive testing. Septic alone could run you $700 to $1,000. Your well, depending on what type of testing, if you do a well flow, you could be maybe $200 to $300 for that and any additional testing that you wanted to do there. So just know that those are going to be out of pocket of fees. You're also going to have an appraisal. So if you are financing the property, which that's what we're talking about, the bank wants to know that they can see the value of what you want to pay for the property. And they're going to send somebody out to do an inspection and make sure that they see that based off the condition. That's generally going to cost you probably about $700 to $1,000. These are all ballpark numbers. So just know that they can be significantly more occasionally, depending on the circumstances, or sometimes a little bit less. But that's your general range that you're going to experience. And those are going to be all out-of-pocket fees that are not going to necessarily show up on your closing costs.
Well, thanks for watching this video today on getting the 5 key points of your financing as soon as you think you're going to buy. It's usually where we direct you to get in and discover what that looks like, so you're not in shell shock or have any surprises, because let's be honest, this is all going to come down to money at the end of the day. Can you get a loan? What type of loan? What's your payment look like? And what are the costs associated with it? Once you've covered that, the relaxation and fun of being able to look for properties is 10 times more. And what we're trying to really emphasize on today's video is not to get the cart before the horse. Start going out and looking at properties before you even know that. And a good broker is going to make you slow down a little bit and get you through that process so that at least you have a general sense of what you can afford. Even if you know you have a great down payment, good credit, all the things, it's important to slow down just a minute. And to be honest with you, to get a pre-approval letter, it doesn't take more than 24 hours in most cases. I mean, maybe you have a little bit of some nuances to your circumstances that could take a little bit more time. But in general, a good lender should be able to get on a phone call with you and generally give you a sense of things, and then be able to provide you the information that we talked about, which is all the fees and costs associated with being able to buy. And then you're off to the races looking for properties with that conscious of clarity that you know exactly what to expect in that realm. So if you found this video helpful, drop a comment below. Let us know if you have any questions. And if you are looking to buy and you need a great recommendation on a lender, we of course have great recommendations, and we would love to see you guys on a phone call and on the next video. All right, have a good one.